After years of fighting, years of silent setbacks, and holding on while the rest of the crypto world moved forward, the moment XRP holders have been waiting for isn't coming. It's finally here. Hey everyone, I'm Mark, and welcome to this special episode. Before we begin, this video is audio only. So wherever you are, in the car, at the gym, or just lying back after a long day, sit back, relax, and listen. Because today we're diving into one of the biggest stories in crypto right now, the arrival of the first ever spot XRP exchange traded fund, officially set to hit the NASDAQ stock market. This is real. I bought a regulated institutional grade XRP product that will allow traditional investors to finally gain direct exposure to XRP through a fully compliant financial instrument. And if you've followed XRP's journey, you know how monumental this is. For years, XRP was seen as the outcast, delisted, mocked, trapped in legal limbo while others soared. But through all the chaos, the XRP community held firm. They waited through the uncertainty, and now that patience is about to be rewarded. Because this ETF doesn't just represent another listing, it represents validation. It's Wall Street saying, we're ready to take XRP seriously. It's the bridge between traditional finance and one of the most polarizing digital assets of the last decade. For those new to the concept, an ETF, or Exchange Traded Fund, is a regulated vehicle that lets investors gain exposure to an asset without needing to buy or store it themselves. It's how institutions safely enter markets that were once too volatile or too complex to touch. Bitcoin had its moment, Ethereum followed, and now XRP, after years of being pushed to the sidelines, is stepping onto the same stage. But make no mistake, this isn't just a financial milestone, it's symbolic. It's about legitimacy, access, and timing. The kind of timing that can rewrite narratives, move markets, and open the door for the next wave of crypto adoption. In this episode, I'll break down everything you need to know. Who's behind this ETF? And that brings us to today, November 12th, 2025. This is the day the narrative officially changed. Investment firm Canary Capital filed a Form 8A with the SEC. For most people, that's just bureaucratic paperwork. But in finance, it's a critical signal. It's the filing that formally registers a security for trading on a national exchange. And in this case, the security is the Canary Capital Spot XRP ETF, and the exchange is the NASDAQ, under the ticker symbol XRPC. Let's be clear, this isn't a rumor from social media or a website glitch. This is an official SEC filing that clears the final hurdle for trading to begin, possibly as early as this Thursday, November 13th. This is the culmination of everything the XRP community has been fighting for. Now, it's really important to understand the difference between this and what we've seen before. You might remember the buzz earlier in 2025 around futures-based XRP ETFs, with firms like ProShares filing for products. While those were a step forward, they were just an appetizer. A futures ETF doesn't hold the actual asset, it holds derivative contracts that bet on the future price. It provides price exposure, but it doesn't create direct buying pressure on XRP itself. A spot ETF, on the other hand, is the main course. It's the real deal. A spot XRP ETF, like the one Canary Capital is launching, is legally required to hold actual XRP tokens in custody. When an investor buys a share of the XRP CETF, the fund's manager has to go out into the open market and buy real XRP to back that share. Think about what that means. For every dollar that flows into this ETF, a corresponding amount of XRP must be purchased and taken off the market. This isn't a paper bet on the price. This is direct, unadulterated buying pressure. This is what we mean by opening the floodgates. For years, institutional capital has been waiting on the sidelines, unable to get exposure through a regulated, familiar vehicle. The spot ETF is that vehicle, a bridge built from the heart of Wall Street to the XRP ledger. The mechanics are designed for the traditional financial system. The Canary XRP ETF will track XRP's spot price using a trusted benchmark, The XRP USD CCIX per reference rate index. The custody of the actual tokens will be handled by institutional grade giants like Gemini Trust and BitGo, with US Bank managing cash components. This isn't some niche crypto product. It's a full-fledged financial instrument, built with the security and compliance that major institutions demand. For the first time, XRP will be packaged and sold in a language Wall Street understands through the brokers they already use. This is the moment XRP moves from the kiddie pool of crypto trading into the Olympic-sized swimming pool of global finance. But here's where the story gets even more exciting. Canary Capital may be first, but they are not alone. It's the start of a marathon between some of the biggest names in finance, all fighting for a piece of the institutional XRP market. Think back to the Bitcoin ETF race in early 2024. Giants like BlackRock and Fidelity went head-to-head, and billions of dollars poured into the market. That same dynamic is now playing out for XRP. The Depository Trust and Clearing Corporation, the core infrastructure for nearly all U.S. securities trades, has already listed several proposed spot XRP ETFs in its system. These listings include funds from not just Canary Capital, but from behemoths like Franklin Templeton, Bitwise Asset Management, 21 Shares, and CoinShares. This DTCC listing is a crucial piece of the puzzle. While it's not a formal regulatory approval, it's a powerful signal that the operational plumbing is being installed. The tickers are being created, and the system is getting ready for these products to go live. Historically, with both Bitcoin and Ethereum ETFs, these listings appeared shortly before the official launch. It's the market's equivalent of the starting lights turning green, and these asset managers are not waiting around. We've seen a flurry of amended S1 filings, the primary registration documents for these ETFs. Companies like Franklin Templeton and Bitwise have strategically removed delaying amendments from their filings, a technical but significant move that essentially puts the SEC on a clock, enabling a process where the ETF can become automatically effective. This is a strategic chess match. Being first to market, as Canary Capital is with XRPC, offers a massive advantage in capturing initial inflows. But the race doesn't end there. The competition will quickly shift to management fees. We're already seeing the battle lines drawn. Canary's XRP ETF has a proposed fee of 0.50%. In contrast, Bitwise has come out swinging, announcing a lower fee of 0.34% for its own pending XRP ETF. This is the start of a fee war, which ultimately benefits investors by driving down costs. What this race tells us is that institutional demand for XRP isn't just a theory, it's a reality these multi-trillion-dollar asset managers are betting on. They see what the XRP community has seen for years: an efficient, fast, and low-cost digital asset with real-world utility. And now they finally have the green light to sell it to their massive client bases. So, we have the lawsuit, the victory, the filings, and the race. But what does it all mean? What changes starting this week? The implications are staggering. First, and most obviously, is the wall of institutional money. You're going to hear this phrase a lot, and for good reason. An ETF is a key that unlocks doors that have been sealed shut for years. Think about a pension fund or a corporate treasury. These entities manage trillions but operate under strict rules. They can't just open a crypto exchange account and start buying tokens. An ETF solves all of those problems. It trades on a stock exchange they already use, like the NASDAQ. It's cleared through the same systems they use for every other stock, like the DTCC. Its custody is handled by regulated insured custodians. For a fund manager, buying a share of the XRPC ETF is as simple and compliant as buying a share of Apple or Microsoft. This is why analysts are predicting billions could flow into spot XRP ETFs. While some figures are speculative, reports mention that JP Morgan analysts have anticipated over $8 billion in inflows in the first year alone. Canary Capital's CEO, Stephen McClurg, has predicted the XRP ETF could see inflows that double what Solana ETFs did in their first week. Other forecasts suggest the funds could trigger $5 billion in sales in the first month. This isn't retail FOMO. It's a structural shift in capital allocation. Second, this brings mainstream legitimacy like never before. The SEC lawsuit was a stain on XRP's reputation. This ETF is the ultimate vindication. It signals that the highest financial regulator in the US is now comfortable with a regulated product offering direct exposure to XRP. This moves XRP from the altcoin category into the realm of legitimate investable assets, alongside Bitcoin and Ethereum. The psychological shift is impossible to overstate. And what does this mean for your portfolio? We're already seeing the effects. In the days leading up to this news, as ETF anticipation grew, XRP's price surged, with reports noting it climbed over 11% to touch prices between $2.46 and $2.55. Trading volume skyrocketed, jumping over 40 to 50% in a 24-hour period. The real impact will be felt as actual inflows begin, creating a powerful and sustained source of demand that simply didn't exist before. Finally, there's the effect on the XRP ecosystem. For years, Ripple has been building out the utility of the XRP ledger. A successful ETF brings a massive spotlight to all that development. Institutional investors won't just buy the ETF, they'll start researching what's happening on the ledger. Ripple's recent $500 million funding round, which brought in giants like Citadel Securities and Fortress Investment Group, shows that the smartest money in finance is already positioning itself for this new era. The ETF is the public-facing vehicle that allows everyone else to join them. With all this excitement, it's crucial to stay grounded and look at the potential risks. Nothing in investing is a sure thing, and it's our job to talk about the headwinds. The first risk is regulatory unpredictability. While the Form 8A filing signals the final hurdles are cleared, the SEC is known for being unpredictable. Until shares are officially trading, there's always a small chance of a last-minute objection or procedural delay. The second major risk is the classic buy the rumor, sell the news event. We've seen this pattern time and again, including with the Bitcoin and Ethereum ETF launches. The market has been anticipating this XRP ETF for months, and the price has already run up. It's entirely possible we'll see a wave of profit-taking once the ETF officially launches, leading to a short-term pullback. On-chain data has already shown some of this behavior, with outflows from spot markets even as ETF hype builds. So if you see the price dip on launch day, don't panic. It's often a normal part of the market cycle. Third, we have to consider the broader macroeconomic environment. Crypto doesn't exist in a vacuum. Interest rates, market liquidity, and geopolitical stability all play a role. The U.S. government shutdowns we saw in late 2024 and early 2025 are a perfect example. They temporarily halted the SEC's review process and delayed everything. Any future economic instability could slow the flow of capital into new products like these ETFs. Finally, there's competition. Canary Capital has the first mover advantage, but that window could be short. With giants like Franklin Templeton and Bitwise hot on their heels, a fierce fee war is inevitable. While this is great for consumers, it means inflows will be split among several products, which could dilute the market impact of any single launch. Acknowledging these risks isn't about being bearish, it's about being prepared. The long-term outlook is incredibly strong, but the path forward will likely be volatile. So let's zoom out and look at the bigger picture. This isn't just a win for XRP, it's a landmark moment for the entire crypto industry. The launch of a spot XRP ETF marks the third major chapter in the institutional adoption of crypto in the US, following the groundbreaking approvals for Bitcoin and Ethereum ETFs in 2024. What we're witnessing is the systematic construction of a bridge between traditional finance and digital assets. For years, crypto was seen as a Wild West, too risky for serious institutions. This is the maturation of an asset class, the transition from a niche retail-driven market to one deeply integrated with the global financial system. The infrastructure is being built, regulatory clarity is emerging, and institutional demand is undeniable. The launch of the XRP ETF isn't the end of the story. It's the end of the beginning. It closes the chapter on XRP's long battle for legitimacy and opens a new one focused on growth, adoption, and integration into the mainstream economy. The journey has been long. For anyone who held XRP through the regulatory winter, the delistings, and the doubt, this moment is profound vindication. To go from an alleged unregistered security to being wrapped in a fully regulated NASDAQ-listed product is historic. This isn't just about a price pump. It's about legitimacy and access. It's about the doors to trillions of dollars of institutional capital finally swinging open. The lawsuits and uncertainty, that was the past. The ETFs, the institutional inflows, the mainstream adoption, that's the future, and it starts now. The catalysts are aligned, the infrastructure is in place, and the race has begun. The journey was long, but for XRP, the real story may be just beginning. This story is going to evolve rapidly. To make sure you don't miss a single update, subscribe to the channel and hit the bell. We'll be covering every development as the XRP ETF goes live, tracking the inflows and analyzing the market's reaction in real time.